Hello, this is your teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve the question from O Levels Accounting that has come in May June 24-21. May June 24-21, and the topic is basically incomplete records. So we are going to solve a question from incomplete records, not single entry. It's about conversion into double entry. So Stella started in business as a retailer on 1st April. She sells one type of good only. She has not kept a full set of accounting records, but has provided the following information. So as the business has newly started, it means there is not going to be any opening inventory. No opening inventory, no opening trade receivable, no opening trade payables. Half of Stella's purchases were on cash terms and half on credit terms. It means that whatever be the purchases, half purchases out of total purchases, half purchases are on cash and half on credit. During the year ended 31st March, Stella paid 34250 to credit suppliers. This is payment to trade payables. On 31st March, she owed 2960 to credit suppliers. So these are the trade payables at the end because the business has started on 1st April. So on 31st March 2024, that is the end of the year. So that these are the trade payables at the end. So I have to prepare the PLCA, the purchase ledger control account, in order to find credit purchases. So I'm going to go for the PLCA in order to find credit purchases. So I will write here PLCA, so jot down. Here I'm going to write the carried down. Here I'm going to write the payment to trade payable. And here I'm going to go for the credit purchases. So this is how we will do that. So brought down, if I will look for the brought down is still, there is no brought down trade payable at the start. Trade payable at the end is given 2960 is going to be the carried down. I will write here 2960. Then payment to trade payable are given in the question, that is 34250. So I will write here 34250. And the difference is going to be the credit purchases. So I can go for the total of payment to trade payable. I can find the credit purchases. So let me do that. 34250 plus 2960, 37210 is going to be the credit purchases. And we know that as the total purchases is going to be half the amount is for the credit purchases, which is 31210, and the remaining half is going to be the cash purchases, that is again 37210. So we will get the total purchases 37210 plus 37210, 74420 is going to be the amount of credit purchases. Now, the examiner, which has asked us to prepare the statement of profit and loss, because we have to prepare the statement of profit and loss to solve this question. And this has come in May, June 24-21. So it means that in May, June 2025, you might see the same question in your exams. In variant 22, I'm talking about. So revenue, all the sales are for cash, and Stella markup was 32%. So there is no, basically, there is no less cost of sales. There is no credit sales. All the sales are basically for cash. But unfortunately, we are not able to calculate the cash sales, or we are not able to calculate the credit sales because there is no credit sales. So I will go with the cost of sales, opening inventory, add purchases, less closing inventory. Yes, sales return will be subtracted, or purchase return will be subtracted, and carriage inward is going to be added, but there is no sales purchase return or carriage inward. So I have written opening inventory, but there is no opening inventory because the business has newly started. So whenever we are going to start a new business, there is no closing inventory, opening inventory, because in the previous year, there was no closing inventory. So because there was no closing inventory in the last year, as there was no business, so we are not able to write the opening inventory. So the purchases are 74420 and less closing inventory that is given in the question. Inventory was valued at 6420 at 31st March. So I will subtract the closing inventory from here, 6420, and I will get the cost of sales. So let me calculate it. 74420 minus 6420, that is 68,000. So I will write here 68,000. Okay. So now I'm going to write here gross profit. Okay. So revenue is going to be how much? Let's see. We don't have the revenue actually. We have only cost of sales. But we know that the markup is 32%. So what I will do, I have cost of sales and I have been given the markup. So 68,000 multiplied by 32%, I will get the amount of gross profit. So 68,000 into 0.32, 21760 is going to be my gross profit. I don't need to convert markup into margin. Why, sir? Because markup is the gross profit percentage on cost of sales, and cost of sales, we are having the cost of sales with us. वो पता है हमें, निकाल ली हमने 68,000. So 32% of 68,000, which is the markup, we'll get the gross profit 21760 plus 68,000, that is 89760 is going to be the revenue for the year. Now, up from gross profit, we have to subtract the expenses. So let's subtract the expenses from the gross profit. The first expense I'm going to write, if we look at the question, rent and insurance, but it is given that the rent and insurance 300 for wages have been unpaid, which is added in purchases, and 500 was paid in advance for rent. So 6750 and prepaid rent 500 will be subtracted. So I will write here rent and insurance, and I will subtract 6750. 6750 minus 500, right? Let's see, minus 500, which is prepaid, expenses paid in advance, right? That has been paid in advance, rent paid in advance. It needs to be subtracted. Insurance is 2400 per annum. On 1st April, Stella paid 3000 for insurance for the following month, following 15 months. So we have paid the insurance for 15 months on 1st April. You know that we are supposed to write insurance for the 12-month period. But because they have paid 3000 and the insurance is 2400 per annum, so 200 per month is going to be the insurance, should be the insurance. But we have paid the insurance for 15 months, but we should have paid the insurance for 12 months. So 200 into 3, 600 is going to be the prepaid again, and that also will be subtracted as the insurance paid in advance. Let's make it more simple. Insurance for the whole year, that is 2400. That's it. So we have paid the insurance of 3000. It means that 600 has been paid in advance, in simple words, right? So what we'll do, I will subtract 600 from the rent and insurance 6750. But in short, how I have calculated that we have paid the insurance of 3000 for 15 months. So 3000 into 3 over 12, because 3 months insurance has been paid in advance. So 3000 into 3 over 12, we will get the prepaid insurance. So 6715 minus 500 minus 600, we will get the answer for our 6750 minus 1100, that is 5650. So rent and insurance is going to be 5650, which is the expense should be written under the heading of expenses. Wages 8300 plus 500, because that is unpaid, that is accrued, which will be added 8300 plus, 8300 plus 500. So that is going to be 8800. It will be the amount for wages. Now, other expenses include 120 paid for vases and flower. 1/3 of these were for Stella's own home. And Stella treat business cost of under $150 as revenue expenditure, right? That's what is basically the information given of 150. It is not have nothing to do with the question actually. So 1815, 120 out of 120, which is included in the other expenses. 1/3 is his personal expenses, Stella's personal expenses, that is drawings. So 120 divided into 1 over 3, that is going to be 40. So what I will do, 1815 other expenses, 1815 minus 40, we will get the answer. Let's do that. Because 120 divided by 3, 40 minus 1815, that is 1775. So 1775 is going to be the other expenses. So this is how I will do that. The total expenses will be there. And then I'm going to go for the profit for the year. So let me calculate that 5650 plus 8800 plus 1775. 16225 is the total of expenses, and minus 21760, that is 5535, is the profit for the year. So I have calculated the profit for the year. There is no depreciation in the question. Otherwise, I would have written the depreciation also under the heading of expenses. So this is how we have we have prepared the statement of profit and loss or income statement, what you can say. So you will find this the same question of markup and margin in your upcoming exams in May, June 2025 in O levels. Stella's sales revenue was the same each month for the year to 31st March 2024. She is now considering selling on credit terms as well as for cash. Advise Stella whether or not to start selling on credit terms. Justify your answer by providing points for and against starting selling on credit. So Stella's sales revenue was the same each month for the year to 31st March 2024. So it means that the sales revenue will remain the same, because it means that the customers are not going to increase or decrease, because all the customers are basically purchasing the goods for cash, because the whole sales are on cash, which is 89670, which is giving you a profit of 5535. But as the sales are the same for each month, for the year to 31st March 2024, we are preparing 31st March 2024. So I think we should start selling goods we are selling goods on credit also, right? Because there are two reasons behind, because our customers are not increasing, even our cash customers are not increasing, especially in this month, because the sales revenue has not changed every month. So no new customers are going to attracted, and maybe your competitors can get benefit out of this for the next few months. It means that still we don't have any problem, because the customers have been retained in the business. We are going for the customer retention. It looks like that the customer has been retained. We have loyal customers, and that is why they are purchasing goods for cash, right? And they will continue with us because they are satisfied with the product, with the quality of whatever we are producing, we are giving them, and they are our loyal customers also. So they will continue with us. But if you want to increase the sales, right? So for that reason, you have to sell on credit, because cash customers are not increasing actually. So if we sell goods on, if we are going to sell goods on credit, it will increase our sales. Definitely, eventually it will increase our profit, right? And definitely we have to wait for the cash to come actually, because we are selling goods on credit. We are giving them credit period of 2 or 3 months. It means that regarding the credit customer, we can have bad debts, right? And we have to might offer them discount to collect amount from the trade receivables, and we have to face bad debts, and then our cash customers can become can become upset. Our cash customers can become dissatisfied, because they might ask us to give them on credit also in the same manner as we are giving to the credit customers. So our overall sales might decrease rather than increase, because credit customers will not pay us right now at the start, and our cash customers might start asking us to give us also on credit. Otherwise they will move towards the competitors, or some other reasons. Maybe they will feel dissatisfied because we are giving credit terms, right? But if we are giving credit terms and we are selling them a little bit higher, the goods which are selling on credit, we are pricing those goods a little bit higher than the cash customer, then there will be no problem, because cash customer will also be satisfied, and we can give discount even to the credit customer if they are ready to pay cash within the stipulated time period or earlier than the time period. So because that will remove bad debts also. So that will be the part. So it is better that we should do this kind of a policy, that we should continue with the cash sale, and we will offer credit terms, higher selling price to the credit customers, and then give them discount for the collection of the cash. State the accounting principle Stella is following when she treats prepayments for small items which may last longer than 1 year as revenue expenditure. So that is materiality concept says that small assets are recorded as an expense rather than as an asset. One advantage of the principle in 5D, the materiality concept is that like for example, loose tools, they can be lost, they can be broken. So we used to record them according to revaluation method, and that method is basically applied according to materiality concept, that small assets are recorded as an expense rather than as an asset because they can be lost, they can be broken, right? And their amount is immaterial. That's why. State two advantage of maintaining a full set of vanity record. We can extract a trial balance. We can find the profit or loss for the year. Our business accounts becomes more reliable. Investors have more confidence in the business. We can prepare financial statements, and such kind of things can be a part of the question. So this is how we are done with this question. Thank you very much. Allah Hafiz.